So there's hope for a diplomatic solution. I think the key word we'll all agree is hope there. Too much hope, too little hope. Right now, futures up 2% on the S&P 500, on the Nasdaq up 2.5, on the Russell up 1.7. Equities with a lift going into the opening bell. There's your opening bell. Switch on the board and get to the bond market. Yields higher. Going into CPI tomorrow at 6 basis points at 190.79. Twos back through 160. CPI in America expected to come close to 8% tomorrow morning. Euro dollar session highs, there we go, 110.50 almost, up 1.35%, and crude lower as you might expect. So the last couple of days upside down, we're down a little more than 5% to 117. At the open, about 20 seconds in, we're up 0.9% on the S&P 500. The winner of the year, the loser of the session, energy down 0.75%, information technology up by 2.7%. We have seen company after company over the last few weeks pull out of Russia. This from Reuters just moments ago. Nestle suspending capital investment in Russia. So can we find a diplomatic solution? Moments ago in the last 20 minutes or so, Maria Tadeo sat down with an aide to President Zelensky. Take a listen.
If you ask me whether there is a diplomatic solution, surely we're ready for the diplomatic solution.
Team coverage starts right now with Maria Tadeo out of Paris and Anne-Marie down in DC. Maria, let's come to you first. For the people that haven't seen the headlines, haven't heard your interview yet, go through all of it for us.
Well, there's three major things that he said in this interview. And again, this is someone who's very close to President Zelensky and works very closely with the Ukrainian government. And of course, he told me, one, there is still a diplomatic solution. There is a diplomatic way forward here. When it comes to neutrality, remember, this is perhaps ditching that pledge to join NATO, to be a neutral country in this. Well, he told me they can talk about neutrality, and that is on the table, and it could be an option. But he did say we need written, ironclad, crystal clear guarantees from everyone involved. And it's not just Russia that we need here. It will probably also entail the United States and a number of other countries. He also said they don't trust the Russians. They do not trust Vladimir Putin, but they can't ignore the fact that Russia is a neighbor, and it is a big neighbor. I also asked him about the speculation that Ukraine could go into a soft deal in which they agreed to concede perhaps Crimea, that this is now fully Russia. Remember, the Ukrainian state Crimea belongs to Ukraine, even to this date. And the Donbass, remember, this all started because of the two breakaway regions. And he did tell me, and this is a straight quote, that Ukraine is not going to trade a single piece of its territory. Every inch of Ukrainian territory belongs to Ukraine and the Ukrainian people. He also reiterated, by the way, that they hope that they can get a NATO deal, on the fighter jets. He said, if we're not having a no-fly area over Ukraine and we continue to fight a blitzkrieg-style war, then at least we would need fighter jets, and we hope that there's a deal completed between member states of NATO, but in particular Poland and the United States, quickly, because people are dying.
Maria, when are the next round of talks between Russia and Ukraine?
Well, that is scheduled to happen next week. It would be a Monday. Now, you see, again, that there has been some softening in the language coming out of Russia today, saying, well, we don't want to occupy Ukraine. And by the way, Jonathan, when they say we're not going to occupy Ukraine, the reality is this is a huge country, 40 million people that are armed and clearly fighting every day. So occupying Ukraine right now does not look easy for Russia. They also say we would be okay with President Zelensky staying in office, but the Ukrainians always say we're not going to be a Russian puppet. If Zelensky stays, is to lead an independent Ukraine. And then, of course, you have the biggest question of all, which is what to do with NATO. If Russia does not give the guarantees that Ukraine wants to see, and remember, it would not just be Russia based on my conversation. They also want the United States overseeing this. If Russia does not agree, then, of course, for Ukraine, this is a no-go. And by the way, I asked him, how long can you hold on? You know, how much fighting can you do? And he said, we're going to continue to fight until the end, and we have, quote, blind faith that we're going to win this war.
Trust is clearly an issue here, so let's go through this piece by piece. And Anne-Marie, I'll bring you the Russian response this morning. This is what got things going earlier today. They called it a special operation, their phrase, not ours, and certainly not the Ukrainians' phrase either. They have no goal to, quote, occupy Ukraine, destroy its statehood, nor to topple its leadership. And Anne-Marie, the first thing you said to me when I asked you, does anyone in Washington believe that? You said they don't. So how important is the lack of trust to build a bridge between these two positions right now?
Well, it's an incredible lack of trust, Jonathan, but there's been a lack of trust between Kiev and Moscow and Washington on the side of Kiev since 2014. When you hear the Russian Foreign Ministry spokeswoman say that they do not want to occupy Ukraine, Ukrainians immediately hear that and they almost roll their eyes because Russia has been occupying a territory of Ukraine since 2014. That was Crimea. They've been backing the separatists in Donetsk and Luhansk, which just weeks ago President Putin recognized as separatist states. We should note he recognized Crimea as a separatist state in 2014, and 24 hours later he then annexed it. So when I hear this Ukrainian aide say to Maria that they do not want to give up a single inch when it comes to territory, this is going to then come down to, if this was a negotiating table, Crimea. President Putin is not going to give up Crimea. He would be in a worse territorial position than he was before he invaded Ukraine.
Big move at the opening bell, up 2% on the S&P. Four-day losing streak, we bounce. To both of you, fantastic team coverage, brilliant interview. Maria Tadeo from Paris to Anne-Marie Jourdain out of Washington. AMH, thank you. So there's the move in the equity market. The headlines read as follows from a Ukrainian aide. We can discuss neutrality. We need a security guarantee. We will not trade, quote, a single inch of territories. For the movers around the opening bell, about 5 or 6 minutes in, here's Abby.
John, it is a very solid rally on the day. The S&P 500 up about 2%. Its best day in more than 2 weeks, and it's a broad-based rally. Tech is one of the best sectors, being led by Apple, but the banks right now on top. When's the last time we saw that? Wells Fargo up 4.9% in sympathy with rising yields. Tesla is higher, also a tech/EV car company, and then American Airlines, the travel trade, is on a rebound, up 5.2%. On the other hand, what is losing? It's all about energy and natural resources. You have Transocean, the offshore driller, down 6.2%. Occidental Petroleum down 3.3% in sympathy with oil down. You have Newmont Mining down 4.7% as some of the metals fall. And then Mosaic, the grains and fertilizer company, down 5.3%. So a real reversal of what we've been seeing over the last few days, John.
A slight reversal as well for the forecast for the year ahead. Abby, thank you. Let's get to Kaylee Lyons on that. Hey, Kaylee.
Hey, John. Well, you're starting to see more strategists cutting their targets for year-end. Citi just the latest. Remember, in January, the target was up from 4,900 to 5,100. Now it's getting cut all the way down to 4,700. And Citi isn't alone. You've seen Andy Yardeni over at Yardeni Research doing this, BTIG doing this as well, playing catch-up to a market that has fallen really quite far this year. It's been the worst, among the worst starts to the year we've seen in the last century, John, down more than 10% year-to-date on the S&P 500. And of course, this is happening in tandem with elevated concern around inflation, with commodities up 30%, break-even yields in and around record highs along with that. And it raises a question of what the impact could be on corporate profits and, of course, what is the resulting monetary policy response to inflation and what do tighter financial conditions mean? So that leaves investors looking for a hedge here against inflation. The obvious place, those stocks that benefit from higher commodities prices. That includes the metals and material stocks, energy as well. They're in orange and blue here on this chart, as we've seen oil prices in purple going up and metals prices, of course, going up as well. But I want to point to one individual stock in particular that has been benefiting in recent days, John, and that is Caterpillar, coming already off of its best 5 days, going all the way back to the end of March 2020. It's now higher for a 6-day today. It obviously makes mining and construction equipment, and one analysts are now saying that with Russia locked out of commodities markets, capacity and investment is going to have to be expanded elsewhere to make up for it, and that in and of itself could become a boon for Caterpillar, making it also a kind of inflation hedge, John.
Kaylee, thank you. Back with us, Bob Dole, Gene Tenuto, Joanne Feeney. Joanne, I want to come to you. Lou Wank here at Bloomberg wrote a story yesterday, really interesting, about worrying about that post-COVID melt up all over again. I think the biggest challenge for investors sometimes is to live in the future when you see devastation playing out right in front of your face. 2 years ago, it was the pandemic, and right now it's a humanitarian crisis in a place like Ukraine. How hard is it to do that, Joanne, to live in the future 12 months out, 18 months out, with things like this happening?
Yeah, John, we like to remind our clients that you don't own stock in a company for what it's done for you in the past. You own it for what it can possibly do for you in the future. And that's why when you look at the history of the market, whether it's wars, conflicts, recessions, right, the market always comes back before the real economic data improves. And I think, investors sitting on the edge of their seats right now wondering, when this thing is going to turn around. But it's really important to step back from these headline risks that we're talking about and think about how the world has changed in terms of opportunities. That Caterpillar story was a good one, but also defense companies, for example, right? We're going to see now an increase in defense spending among the Western alliance nations, and that's going to last for a number of years. We've liked those. We've owned them for a long time. We always thought of them as insurance against geopolitical risks. But longer term, if you're going to look forward, like you just suggested, Jonathan, that's one place to look. And the banks got oversold. People aren't recognizing that, yes, there's going to be a slowdown in growth, but we're still in a recovery period. So you really do have to look forward and, again, look at the history of the market for those lessons.
Bob Dole, where do you think energy and basic resources fits into that story, that discussion Joanne and I are having at the moment? You've got these commodities, pretty much all of them, trading in massive backwardation, this huge, huge amount of demand for everything up front now and limited supply. When you look at 12, 18 months, is that a world maybe we've got to get used to?
I think we will back off as we get answers to Russia-Ukraine. We're making the assumption that a year from now we'll still be talking about this, but it's going to have be in the background as opposed to the only thing we talk about. In that environment, probably like today, oil prices and other commodity prices come off somewhat. There's a premium in there because of the uncertainty around supply. We're going to have a lot of government spending a lot of time working on the supply issue for energy going forward. How can I be more assured of my own supply? And that has implications along with defense spending, which will be higher. Russia, Ukraine means growth's a little slower and inflation's a little higher.
Gene Tenuso, thanks for your patience as we word through that breaking news. You and I have heard a lot over the last few days that the Fed's got to back off. That's a good thing. I've heard other people say that how can we call it a good thing that the Federal Reserve has lost policy flexibility with inflation set to come into tomorrow at around 8%. You're still looking for 5 to 6 hikes this year. Why do you think they can make that happen?
Well, look, we have to realize that the inflation that we're witnessing right now is entirely outside of the Fed's control. What the Fed can do is observe that demand is higher than supply. It cannot influence supply, but it can bring down demand by crushing the economy. You got to be really careful with that. That's a politically unpalatable solution. So they're going to move slowly. They're going to move gradually. And I think what they're waiting for and hoping for is some improvements not only in supply chain bottlenecks, but in some of these geopolitically driven commodity spikes to help ease some pressure off their back. If we get to the second half of the year and they don't have that easing, that's where I think we get in a much tougher scenario for monetary policy.
To all three of you, thank you very much for being patient as we work through the breaking news and the opening bow. Gene Tenuso, Bob Dole, and to Joanne Feeney, thank you very much. 12 minutes into the session, equities pushing higher. Coming up, the US turning up the pressure on Russia, continuing to strain global markets, and the Deputy Chief of Staff to the Ukrainian President saying this.
We are ready to talk over a large spectrum of topics, but unfortunately for the time being we do not see that kind of readiness from President Putin himself. So we ask the world community to assist us in having these direct negotiations, to sit down with Putin at the negotiation table.
That's next. This is Bloomberg.
We all have to be very careful with the Russian statements, be it good statements or bad statements. We have many propaganda statements throughout this 2 weeks of the war, but very important what is taking place on the ground. What is taking place on the ground is a continuation of fighting, continuation of encircling or trying to encircle some cities and towns in Ukraine, continuation of trying to encircle the capital of Ukraine, Kyiv, continuation to encircle a big city in the east of Ukraine, which is Kharkiv, continuation of bombarding and shelling over the civilian objects of Ukraine. So that is why we are absolutely resisting, like you rightfully said, during this war, and that's what we'll be doing this. If you ask me whether there is a diplomatic solution, surely we're ready for the diplomatic solution. You know, there were 3 rounds of negotiations already on the level of delegation. Tomorrow, our Minister of Foreign Affairs will meet together with the Minister of Foreign Affairs of Turkey, with Foreign Minister Lavrov. But very important that my president is ready to have the direct negotiations with President Putin. We are ready to talk over a large spectrum of topics, but unfortunately, for the time being, we do not see that kind of readiness from President Putin himself. So we ask the world community to assist us in having these direct negotiations, to sit down with Putin at the negotiation table.
So you make it clear that for this to be a solution, or for there to be a solution, President Zelensky will have to sit down with Vladimir Putin. You still believe that that meeting needs to happen?
This needs to happen in order to bring end to this awful war. But it will under no circumstances be on the Putin rules or being under Putin ultimatums. Our first and foremost precondition for having such kind of negotiations is the immediate ceasefire and starting this with the withdrawal of Russian troops from the territory of Ukraine.
The context for the headlines over the last 30 minutes or so important. An aide to President Zelensky sitting down with Bloomberg's Maria Tadeo. The top headlines there. They can discuss neutrality. They need a security guarantee. They will not trade a single inch. They will not trade, quote, a single inch of territories. Anne-Marie down in Washington catching up with us now down in D.C. Anne-Marie, you heard the demand there. The objective. How do we get these two leaders to sit across from each other?
Well, he also talked about what's going to go on tomorrow, which is Dmytro Kuleba, the Ukraine foreign minister, will be going to Turkey to meet with his counterpart, Sergei Lavrov. So I think that will be a critical meeting. And now you have a little bit of the potential list that the Ukrainians want to get the Russians on board with. The hardest thing seems to be the territorial guarantees, Jonathan, because as we've said, Russia has occupied Crimea. There are Russian speakers there. They have now Russian passports since 2014. Ukraine says that is still a territory part of Ukraine. It was illegally annexed, while Russia believes it is the reunification of Crimea with Russia. So this is going to be one of the biggest sticking points. When he talks about security guarantees, I go back 30 years, the fall of the Soviet Union. There was a security guarantee from Ukraine to Russia that they would get rid of their nuclear arsenals. In the fall of the Soviet Union, the end of the Cold War, the nation with the third biggest nuclear arsenals was Ukraine, some 5,000 worth. They gave their security guarantees, which is why they are in also a precarious situation right now where they don't really trust their neighbor.
Bridging the gap and a lack of trust. The lack of trust is so important with that in mind. Anne-Marie, repeatedly, you and I have gone over that statement from a briefing from the spokeswoman to the foreign ministry in Russia today. The Russians still call this, quote, a special operation. So when they say things like, quote, we don't want to occupy Ukraine, destroy its statehood, nor to topple its leadership, we've seen the images, the photographs, the video on the screen. And AMH is heartbreaking. And to everyone else looking in, to those in Ukraine experiencing it, it doesn't feel like a special operation. It looks like an invasion. How do you establish any trust with someone who calls it a special operation when to everybody else it's an invasion?
Well, this is at really the heart of the issue, and also the deeply devastating humanitarian part of this issue as well. And there's lots of reports that you have Ukrainians that have family and friends in Russia who say to them that's not true, because that's not the information that they are getting from their state-run, Kremlin-run media. And it is heartbreaking, Jonathan. I have friends who've told me about their mothers sleeping in bomb shelters for 6-7 days and having to evacuate out. I have a friend that has a 99-year-old grandmother in Kiev who refuses to leave her home. These are people who are struggling at the moment. And then you have other reports from non-governmental organizations, aid organizations, talking about corridors, humanitarian corridors that Russia said that they would have, but that they go to Belarus or Russia. That is not where Ukrainians want to go at this moment. And when you hear from the spokeswoman, Maria Zakharova, the foreign ministry spokeswoman, talk about this special operation and no goal to occupy Ukraine, this is the same woman, Jonathan, who also told us Russia had no plans to invade Ukraine.
Just finally, Anne-Marie, is there any evidence whatsoever that the pressure that's built off the back of the sanctions deployed over the last couple of weeks has actually started to reach Vladimir Putin, the Russian president? Is the pressure actually building on the Russian president? Have we seen any evidence of that whatsoever?
We have, in the sense that they're now coming out and saying that they might have their own sanction tit for tat, in the sense that they might stop exports of some crucial commodities. We're waiting for that list. I also, Jonathan, spoke yesterday to the former Yuko CEO, Mikhail Khodorkovsky, who said that there is pressure building and that he believes that there could be a regime change in Russia because of this. One thing Russians will always say to you, if they did not agree with President Vladimir Putin, especially in his foreign policy orbit, that there was a stable economy. After their 1998 crash, financial crisis, tumbling of the ruble, that they felt that they had jobs, access to the West, they had Western companies, they were able to travel. This is something now is completely cut off for the everyday Russian.
Anne-Marie, thank you. AMH down in Washington, D.C. A tremendous interview from Maria today. I was sitting down with an aide to President Zelensky. The Ukrainian aide saying we can discuss neutrality. We need a security guarantee. We will not trade a single inch of territories. 23 minutes in, equities up by 1.65% on the S&P. We were already pumping higher through the morning. We back away from session highs on the Nasdaq up 1.9%. Brent crude this morning looking like this. We're negative 4.6%, 122 on Brent, backing away from the 140 we almost saw on Sunday evening. From New York, up next, your trading diary. This is Bloomberg. It's the main theme this morning. hopes for dialogue, hopes for a diplomatic solution, hopes, and a bounce in the equity market, up around about 1.7% on the S&P 500. On the Nasdaq, up by 2 percentage points. That's the price action. Here's the trading diary. We'll get JOLTS data at the top of the hour. Job openings in America. The EIA crude oil inventory report, 10:30 Eastern. Secretary Blinken holding a joint news conference with the UK Foreign Secretary, 11:15. The big one, US CPI tomorrow morning, an ECB rate decision, and seconds after that CPI report in America, we'll have a press conference with Christine Lagarde. Looking forward to being with you tomorrow. Thank you for choosing Bloomberg TV. This was the Countdown to the Open. This is Bloomberg.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It's 30 minutes into the U.S. trading day on Wednesday, March 9th. Here are the top market stories we are following for you at this hour. Ukraine's terms. An aide to President Zelensky says the country is ready for a diplomatic solution and is willing to discuss neutrality, but it needs a security guarantee and won't trade a single inch of its territories. Dip buyers dive in. Stocks rebound as investors weigh how much of the impact of the war is already priced in, but some strategists warn that it's too early for a re-entry point. And brake pedal to the metal. Commodities are stabilizing after a blistering surge across the complex, with metals taking a breather for now. We'll discuss the trajectory of prices with Jeff Curry of Goldman Sachs this hour. From New York, I'm Kaylee Lyons with Guy Johnson in London. Alex Steele is up today. Welcome to Bloomberg Markets. And Guy, it seems that right now optimism prevailing, perhaps a diplomatic solution, perhaps the worst of it already priced in.
Yeah, I'm Frankfurt today, Kaylee. We're here in Germany watching events nervously. Everybody's eyes cast eastward, trying to figure out exactly what's going to happen. The cost to Germany of this situation escalating continues to get worse. So any news potentially that we could see some sort of an off-ramp for this conflict would be a huge, huge relief. Russia says that it has opened humanitarian routes in Ukraine so that civilians can ultimately leave a number of cities that are being bombarded. At the same time, though, the US says Russians have stepped up their bombardments of key urban areas. Kiev, obviously, front and center. Bloomberg's Maria Tadeo spoke with the Deputy Chief of Staff of Ukraine's President Zelensky. You want to hear what he has to say?
If you ask me whether there is a diplomatic solution, surely we're ready for the diplomatic solution. You know, there were 3 rounds of negotiations already on the level of delegation. Tomorrow, our Minister of Foreign Affairs will meet together with the Minister of Foreign Affairs of Turkey, with Foreign Minister Lavrov. But very important that my president is ready to have the direct negotiations with President Putin. We are ready to talk over a large spectrum of topics, but unfortunately, for the time being, we do not see that kind of readiness from President Putin himself. So we ask the world community to assist us in having these direct negotiations, to sit down with Putin at the negotiation table.
So you make it clear that for this to be a solution, or for there to be a solution, President Zelensky will have to sit down with Vladimir Putin. You still believe that that meeting needs to happen?
This meeting needs to happen in order to bring end to this awful war. But it will under no circumstances be on the Putin rules or being under Putin ultimatums. Our first and foremost precondition for having such kind of negotiations is the immediate ceasefire and starting this with the withdrawal of Russian troops from the territory of Ukraine.
And sir, you know that NATO has created so many tensions. This is an aspiration for Ukraine, but of course Russia says that this is the absolute red line, and that brings the issue of neutrality. What is neutrality, and what does neutrality mean for Ukraine? What are you open to discussing when it comes to neutral status?
Unfortunately, we don't have enough response from NATO. So if you ask me, and it's not only you asking me, many people ask whether Ukraine is ready to discuss the neutrality status. The answer is yes, but at the same time, together with this discussion, the talk should be about hard security guarantees for Ukraine in this case. What does it mean? It means that all the neighbors of Ukraine, including Russia, together with big states such as US, Great Britain, Germany, Turkey, and some others, should give us strict guarantees of Ukraine's security. Not as it was in 1994, when Ukraine was deprived out of the 3rd largest nuclear potential and was given a piece of paper called Budapest Memorandum, which never worked, is not working now. So if this is the case, if the world community will provide us with security guarantees, together with Russia, who should also guarantee security and not repeating the situation, the aggressive war which is happening now, yes, this question is discussable.
So you essentially, to really understand what you said, is that neutrality is an option, but you need to have very clear guidances that are binding, including from Russia and by extent Vladimir Putin, that Ukraine would be protected, respected, and its sovereignty would be upheld. I wonder, though, there are territories that are disputed between your country and Russia. You say that Crimea will be Ukrainian. The Donbass, you say this is our territory. Is that an area where you can compromise, or you would still say this is our territory and we're not going to give up an inch?
No, definitely we will not trade our territories. Whatever the situation on the ground, we are not trading Ukrainian territories, not a single inch.
That was Ukraine President Deputy Chief of Staff Ihor Zhukova speaking exclusively with Bloomberg's Maria Tadeo earlier. So let's get the market perspective on these developments. We are seeing stocks rebounding in a big way today, and joined now by Bloomberg's Romain Bostic and Abigail Doolittle. Romain, I'll just start with you. Obviously, we are up. We saw an additional leg higher on the back of these headlines, but we already were seeing some dramatic dip buying today. Is this just a dead cat bounce, or is it a sign that maybe the market thinks it overpriced this risk?
Well, it's hard to know. I I mean, you've got a lot of folks out there who do say that, okay, we're basically in oversold conditions, at least on a relative basis with some of the individual names, and that there might be some bargains to be had there, assuming that the situation is sorted out. Of course, the pessimistic case scenario right now is that this is still going to be a long time coming. We don't know what the outcome of this war is going to be, and more importantly, we don't know what the outcome is going to be with regards to the economic ripple effects. We still have elevated commodity prices, oil, wheat, you name it, it's higher, and that's going to have dramatic impact on the bottom lines of a lot of these companies.
Abigail, at times like these, when it's so impossible to really price what is going to happen next, to really get a handle on what is going to happen next, the market often turns to technicals. We have obviously a huge amount of uncertainty at the moment. Yesterday it felt like we were getting into oversold territory. You look at the positioning going into the close around the VIX, for instance, useful maybe to give us an idea of what comes next. What are you seeing in the technicals right now that are giving us a clue to how stretched these markets are now?
You know, great question, Guy, and it's interesting because if you take a look at the S&P 500, it looks like the chart in some ways is breaking to the downside with the index well below all of its moving averages. On the other hand, yesterday's low is above the last low, giving some sense that perhaps there's a buyable dip here, but buyable for experienced and disciplined investors, because as we know, this market's not for the faint of heart. A couple of the big themes this year, clearly volatility, no explanation needed. One encouraging sign for a possible dip buying experience right now is the fact that the VIX appears as though it's going to moderate. Another options index, the SKU index, it's sometimes called the panic index, it actually hasn't participated in this at all. So that's a reason to think that maybe that there's going to be some relief, especially as Romain was mentioning, oil and some of the other commodities in right now elevated, but today they're in. But something else that you want to think about on the year, probably one of the biggest factors to be thinking about, the Fed next week. Right now, markets have the Fed hiking by one time. What does that mean?
Well, and Abigail, by extension of Fed expectations, what really seemed to move the equity market earlier this year was whatever we were seeing in the bond market. If yields were higher, that was a pain point for equities. If they were lower, you saw a bid coming back in. Now it seems that that correlation matters less, and it's really about what commodities prices are doing. Is that how you view it?
That's a great point, Kaylee, because earlier this year it was all about yields, and then over the last couple of weeks with this Ukraine war, it's really become about commodities. It wouldn't be surprising, though, to see if that narrative shifts back to bonds, but at what level? Because, of course, yields earlier, the 10-year yield above 2%, at that point, stocks seem to be okay in this new volatility regime, but digesting it to some extent. So what would the level be that could cause volatility and switch that back to all about yields for stocks? It's hard to say right now, but can't count yields out yet at all, especially given, and I think that this is another big theme to pay attention to that we've talked to before, the likelihood of yield curve inversion. What does that mean? You put all of this together, and maybe we're looking at some sort of rolling bear market on the year. If that's true, and we don't know that it is, but bear markets tend to have the best rally. So again, this could be, you know, an extended rebound rally, relief rally.
Romain, I just want to go back to what you were talking about just a few minutes ago, talking about the fact that this could, even if we start to get a sense of how this is going to be resolved, it's going to take a long time to be resolved. We seem to be in an environment at the moment where we have a huge amount of uncertainty. You can't price uncertainty. No. It's not quantifiable. If we were to see this becoming a risk event, i.e., it's going to take a long time to sort out, we can now start to quantify the impact that this conflict is going to have. We can see what the off-ramp potentially is, but at least we can now start to quantify it. The market can get its arms around that and start to kind of think about how it prices it. At that point, how is the market set up? Do we get a big equity market rally? Do you see a refocus on what the Fed is doing? I'm just kind of curious as to kind of how the market would pivot around that kind of an event.
Well, I think it does certainly shift back to the Fed and back to the economic trajectory. I mean, we talk about this idea that the markets like certainty. That's probably a little bit of an overstatement. But what they do like is, I think the word you use is something that is at least quantifiable. And right now, geopolitics aren't really quantifiable. If you do get a ceasefire or you get some sort of a pivot in this war where you're able to sort of quantify the impact, the economic impact, and the impact on the bottom lines of these companies, that'll give investors a little bit more confidence to come back into this market. When you look at the cash that's moved out of stocks, and more importantly, the amount of cash that's moved into money market instruments and into safe havens like the dollar and the treasuries, you get a bit of a sense here that the market has not found a way to quantify the potential damage from this. Only when you get that ability to do so, then you'll see that shift. And to just quickly to Kaylee's point, or to Abigail's point about the Fed next week, don't forget we get the ECB, which I think is going to be even more critical here, because you'll get a much better sense of what the Europeans are willing to do, at least from a monetary policy perspective and potentially from a fiscal perspective, in response to the economic and the energy shock that they're facing right now.
Well, and of course, Ramin, it's not just the ECB we're going to get tomorrow. We also have that all-important U.S. CPI data coming at 8:30. What kind of catalyst could that be, given this is a market that has priced and repriced the Fed many times over already this year?
Well, this is going to be really the communication threading of the needle that I think a lot of people thought Powell had sort of nailed already. But this is going to be even more important. When you look at that report that we get tomorrow, remember, that's going to sort of just about cover some of the gains that we had started to see in the energy market right at the end of February. It's not necessarily going to reflect what we've seen, obviously, over the last last week and a half here, but we'll get a taste of that. And it's really going to be about the guidance that Powell gives to this market and gives to the public out there as to how they're ready to adjust, if at all, to this surge in energy prices. And at least from what we've heard out of a lot of monetary policy participants so far, they're willing to stay the course.
Final quick question to you, Abigail. In terms of the volatility indices, we saw yesterday a lot of action into the close. Maybe that set up the situation that we have right now. But just in terms of where we're going with pricing volatility at the moment, I keep coming back to this issue of uncertainty. The market's trying to figure out how to price it. What are you seeing there in terms of the technicals? What are the technicals around volatility telling us about where this market is going?
Well, you're really nailing it there, because volatility does represent uncertainty, and the volatility that we're seeing right now is extreme, because the VIX, of course, over the last 6 months, 9 months at this point, it's been trading higher, slowly but surely, on this series of higher lows, telling you that vol buyers get more and more excited each time. But another measure, the VVIX, that's the VIX for the VIX, so basically a measure of intraday volatility, it's been elevated as well. So it tells you not a lot of people know. There's just so much uncertainty in terms of these different factors, with the war, with the Fed, the commodities, inflation, all tying together, of course. Right now, though, the VIX does appear like it's likely to go back down into the bottom of the range, suggesting that longer term there could be a big spike in volatility, but in the near term there's reason to think that that VIX might go back toward 20 in the next week to 2 weeks, 3 weeks, a little bit of a relief rally. How long it lasts, if it happens at all, hard to say, because again, there's so many measures. But that skew index, that panic index, it's been subdued the whole time. So again, it may suggest that there's going to be a little bit of a move lower in all this volatility. Maybe stocks will pop in the near term.
Absolutely. And if you relate it back to Maria's interview, potentially we're starting to see maybe the shape of a deal being done. We'll watch that with interest. Bloomberg's Romain Bostick, Bloomberg's Abigail Doolittle. Thank you very much indeed. We're going to carry on the conversation about what is the setup for these markets right now. Our next guest says it's a difficult time for investors to take action and take action comfortably, but there are still opportunities out there. We're going to talk to Kim Forrest from Boca Capital Partners. She's the founder and CIO there. That's next. This is Bloomberg.
Sponsor Bank of America.
Wall Street prepares for the latest read on inflation.
It's going to be a big number.
We are drowning in uncertainty.
Economists predict the highest numbers in 4 decades.
Many estimates now have an 8 handle in front of it.
Not even including gas.
Instant reaction.
Keep an eye on the resiliency of the consumer.
It's not a question whether we get a recession. It's like, what kind of recession are we going to get?
And what it means for the Fed.
This trend is no friend to the Fed.
Do we lead to a slower growth kind of paradigm?
They're going to want action at the White House.
Inflation in Focus, Thursday morning at 8:30.
The dip buyers are out in force. We are right around session highs when it comes to U.S. equities, up 2% on the S&P 500. You already had dip buying coming into this morning. Then the headlines out of an aide to President Vladimir Zelensky of Ukraine saying that they are ready for a diplomatic solution, outlining the terms of what that may look like in Ukraine's eyes, feeding into some optimism potentially that there could be an off-ramp or some sort of end in the future to this conflict. But of course, there are still a lot of questions remaining. Now, as we're seeing equities moving higher, you see yields moving higher as well. The 10-year yield up 7 basis points to 196 or 191.66. You are seeing a weaker dollar for the first day in 5, and crude is also coming off. Some of that commodities pressure cooling off. We're down the better part of 5% on WTI, but at a still elevated $117 a barrel. So let's get more on these markets. Kim Forrest, Boca Capital Partners founder and CIO, is joining us now. Kim, would you be a buyer of the dip this morning?
I would. I've been a buyer selectively, I have to admit, all along, and that's because I have an eye on 3 to 5 years out, not the next year. And I think your timeline makes all the difference in the world when you're a buyer.
What are you buying, Kim?
Well, I am currently running a sector-neutral strategy where I have to buy a little bit of everything, right? So where the values are, that's kind of where I go to fill in holes in the portfolios. And technology has really given a lot of room for some comfortable buying in uncomfortable times.
So, Kim, let's talk about the specific areas in which you are buying. What would you want to be adding to, and what are you staying away from?
Sure. Well, I'm a growth at a reasonable price sort of investor. So what do I have to make me comfortable is a good balance sheet, a company that is firmly in the green, which reports earnings, not losses, and management that does what they say and then say what they do and then do what they say, right? So that leads me to semiconductor stocks. Looking for the long term, 3 to 5 years out, I think that there will be a whole lot more of productivity enhancing sort of products out there for companies. We kind of had a lull in the last 15 years where people have been investing tech dollars in entertainment and consumer-oriented sort of areas. But I think the time now, especially with the smaller workforce and just a smaller aging workforce throughout the world, we're going to have to use technology well. And that is always delivered on semiconductors.
In terms of how you think about the tech sector in relation to rising yields, clearly, and this is less so for the chips, but it is more broadly an issue for the whole of the tech sector, it's a long duration asset. The Fed, will see what the inflation data looks like tomorrow, but the expectation is certainly that the Fed goes 25 with the possibility, as Jay Powell has hinted at, as 50 further down the road. If we are on track to see rates going significantly higher here, and certainly there's a big inflationary impulse right now, how does that affect your thinking around these tech names?
Sure. Well, in the beginning of the Fed's tightening phase, what I think people are going to do is revert to the old ways, and that is to think of semiconductors as something that grow with GDP. And if you're afraid of tightening in like these uncertain times, there might be more sell-off. But here's the thing, this time it really is different. The GDP semiconductor growth theory, I think, is going to be thrown out just because of the amount of products we're going to need and at the amount of chips we're going to need to deliver the lifestyle we want. So let's just pick something goofy like cars, right? 20 years ago, there were very few semiconductors. There were some, little electronic components that made your windows go up and down and sense if your hand, was in the window.
Yeah.
But this is a different time. And I think investors really have to look and see how this area is being used and more importantly, where it's going.
Well, clearly a need for chips, Kim, which is why the U.S. is investing in shoring up manufacturing here, better compete with China. And just on the note of China, I noticed in your notes, you think China is a greater threat to the world than Russia at this point. Just quickly, why?
Sure. Well, nukes and war aside, I think they are playing a very, very long game, and they want to take over the important technology sectors. And I don't know that the developed world should just hand over their technology development to a country that has a very long timeline.
Kim, on that note, we will leave it. Timeline a little
Thank
short
you.
here. Always great to catch up, though. Kim Forrest, Boca Capital Partners founder and CIO. This is Bloomberg.
About that all day yesterday.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Rishika Gupta. Heineken has joined the list of companies that has quit doing business in Russia. The Dutch beer maker is stopping its exports to Russia and is halting investments there. The move comes a day after McDonald's, Coca-Cola and Starbucks announced they were temporarily halting operations in Russia also. Adidas is forecasting strong growth for the year, even though revenue from Russia and former Soviet states is expected to drop by half. The Germany sports shoe company says sales will grow as much as 13%. Adidas also says that business in China should rebound modestly from what's been a tough year. And the Chinese nickel company, at the center of a historic short squeeze, has secured a package of bank lifelines. Tsingshan Holding Group faces billions of dollars in potential losses on short positions on nickel futures. It has now won credit promises from banks that include JP Morgan Chase. And that is your latest Business Flash, Guy.
Thank you very much indeed, Ritika. Coming up, we're going to talk more about what is happening in the metals markets right now. Chaos certainly in the nickel market. What is happening in gold and silver, though? Goldman Sachs recently raising its gold forecast. The bank's global head of commodities is, of course, Jeff Curry. He is going to be joining us next. Looking forward to this conversation. This is going to be something you don't want to miss. Kaylee, what we're talking about here is a significant move through 2000. Silver's having a fairly good time as well. The question is, how much higher can we go from here? And what is gold really reacting to? Is it the fact that we're going to have higher rates? Is this an inflation hedge? Or is this something about central banks buying aggressively on the back of what we're seeing done to Russia as a result of its Ukrainian invasion?
It may be all of the above, Guy. That is why we saw gold hitting a 19-month high yesterday. Coming off of that, though, along with really some moves to the downside across the commodities complex. So is this just a brief pause before another rally? We'll pose that question to Jeff Currie of Goldman Sachs next. This is Bloomberg. It's an hour into the U.S. trading session. Bloomberg's Abigail Doolittle is tracking the moves for us. And Abigail, it is a dip buying day, and we're right around session highs.
We are. What a difference a day makes, because we right now have the S&P 500 up 2.2%. Its best day in more than 2 weeks. You also have the NASDAQ 100 sharply higher, up 2.7%, really speaking to the strength of some of the tech heavyweights such as Apple, Microsoft, Tesla, so on and so forth. Not surprisingly, then, the VXN, or that VIX on the NASDAQ 100, is down, still elevated, though, at 35. And then the 10-year yield, this is interesting, is up for a third day in a row. So Haven bonds have been selling off for 3 days in a row. Perhaps some tell on this rally. Now, is it a relief rally or dead cat bounce? We don't really quite know right now, but what we can see is the driver. It's the sell-off in commodities, or it seems to be, at least. If we take a look at what's happening for commodities right across the board, down. Brent crude down 4.6%. You have wheat down almost 6%. Copper down 2%. And gold, Haven Gold, Dow down 2.2%. Now, if we take a look at what's happening between copper and gold, it's interesting because, of course, copper is an industrial metal. Gold is seen as a haven. This is the copper to gold ratio, and you can see going into 2020, copper to gold down as copper really didn't do so well going into that 2020 fiasco and pandemic crash, really, and then up and away on the recovery. But over the last year or so, we've really had this range between copper and gold. We don't know